All right, that looks like that's come up correctly, and so I'll try to move through this fairly quickly for the sake of time, because we usually try to be done about 8. Um, so I'm glad Aaron touched on a lot of those trade topics. There's a lot of things in both the crop and the livestock industries right now, and Brazil and China just happen to be two of the biggest players in the beef market as well. But I think we ought to just start out with, it's hard to be sad in this business because every sector is profitable right now. Anybody all the way from I don't care if you're cow calf, stocker, feedlot, or packer, things are really good, and money's being made at the feedlot and stocker level and packer level. It's just windfall type profit. So it's looking real good. And the cow calf guy, he's come a long way since last fall, and so the mood from last fall till now is totally different, and we're actually at a really good price level. We're not at those extremely high levels where everything was hunky-dory and happy, but we might actually be able to maintain a price level. I do expect prices to decline this fall on lightweight calves, but I don't see as much of a fall in yearling cattle and cattle entering the feedlot. And then at the end of this, we'll talk about some favorable opportunities, to add some weight to animals. So this is what we're looking at right now as far as slaughter cow prices. I'm actually amazed at the level we've reached, but I do think we've already put in our spring high finally. This spring high generally happens in April or early May, and it's persisted so strong. But a lot of these animals that are coming off of feed, they were actually purchased at lighter or at lower prices at 800 pounds, and so these guys are just making $400 and $500 a head on animals that they're marketing right now, which is a good thing considering all of last year. They when you look at that dotted line there and how prices declined, they were losing $400 and $500 a head. So expect these prices to start softening through the summer as they normally would. Normally part of that softening comes with the fact that we have a large run of cattle, but that's really not going to be the case this year if you look at placements into feedlots and cattle on feed numbers. So not too bad a situation. I tell you, I don't know how many people ask me about selling lightweight calves at certain times of the year, and I was encouraging people to sell them in early to mid-April. Sure, they made money, but I guess they could have made more. So, based off of what my best decision would have been, and I tell you, I sold a load myself in at the end of April of yearling cattle. So, yeah, could I have made more money? Yes, but it was profitable anyway. And these guys keep on being profitable. And this rolls right over into the stocker producer on the 7 to 8 weights. And this is, I was selling an 8 weight load myself at the end of April. But yeah, could have made more money. But it kind of goes back to what Aaron's saying. It's all right to set your price on a profit, as long as you're not opening yourself up to a bunch of production risk that could really come back and bite you in the rear end. But prices have been really strong. I expect those. Let me back up one. I do expect these 5 to 6 weight prices to start declining. Will it be in July? Will it be, when will it start? Well, I'm expecting it any day now for these prices to start softening. Well, why is that? Well, when grass starts getting thin due to dry times, there's not as much demand for them. They're not looking for as many animals to put on that grass because it's just not going to be available. Let's hope we don't have that situation, but it's definitely something to be concerned about or to think about. And then as animals, the increase of animals, the supply starts increasing coming to market in the fall, then we'll definitely see some softening in those prices. Nothing like we saw in 2016. I'd be very surprised if these 5 to 6 weight cattle got below $1.20. That would surprise me tremendously. I'm thinking more in the $1.40 to $1.45 range, probably. Maybe but somewhere in that kind of range, and we'll kind of show some of that here in a minute. Slaughter cow prices have been very steady throughout this year. Has presented an amazing window for people to market cows that they need to get out of the herd. 60 to 62, 63 cents is not a bad price on these girls, and compared to where they were in the fall of last year, it's really nice. But that's also a part of revenue for a cow-calf guy. So and knowing that there's people out there, that buy these cows in the fall at a cheap price to put a little weight on them, and just like a stocker calf, there's people that stocker these cows, and definitely a favorable opportunity last year, and 8 out of 10 years this same price pattern happens. For people that are in the stocker business, this may be an option to always keep your mind open to this right here. If you can't source enough, lightweight calves, maybe buying a few cows that are lightweight in the fall, you can turn them over in the spring. Now here's where we get down to really things that are key to what we're talking about. Heifer slaughter is up 9.4% for the year. I do expect this to moderate just a little bit. When prices declined last fall, very few people were apt to keep any heifers to grow a herd or anything of that nature, or to even replace some of their old cows. And that's understandable, because when you get down to $1 a pound for a 5-weight heifer, it's really tough to say, I really want to keep her to try to get some calves out of there. And if you're expecting those prices to stay low, then you're going to get rid of them. And so most of those animals will have been harvested by now. This would be actually wrapping up the end of a lot of those animals. And so, and you can see here where heifer slaughter has moderated relative to a year ago and the past few weeks, and I expect that to continue, because I do expect more heifers to be retained. There's a lot of states that are fully restocked with cattle. In Tennessee, I don't expect herd growth in Tennessee really relative to where we are. That's not something I'm expecting, but there are still several states that Texas and Oklahoma being prime examples, that could use more cows in the herd, still have plenty of forage resources, and they're going to be looking at holding more of these heifers. So not as many of them are going to go to the feedlot, so therefore fewer of them are going to be slaughtered. So 9.4% year to date so far, which is a really strong number. But by the end of the year, that number I very seriously doubt will be 9.4%. It'll probably be, closer to 8% or so. Here's, we talk about increased heifer slaughter, heifer weights on dressed weights. When you've got heifers that are weighing 20 pounds or 30 pounds lighter than what they were, and in this case, a lot of these animals are 20 to 30 pounds lighter than what they were a year ago. That's a lot of beef that's not being produced per animal. So even though we've increased slaughter, we've reduced those weights, and so beef production is not impacted as greatly because weights have been reduced. Steer slaughter is very similar to heifer slaughter. The only difference here is we expect this 4.8% over a year ago so far in the first 5.5 months of the year. We'll expect this to remain between 4 to 5% above a year ago for steer slaughter. Again, been moving these animals through the feedlot very, very quickly, and that's represented here in the steer dress weight. Again, very, very light animals compared to last year. Well, why are we doing this? Why is the feedlot? Well, because they're making lots of money. In the futures price, the futures, if you look at the futures market on fed cattle, it's saying all prices are going to be lower next month. Prices are going to be lower 3 months down the road, 6 months down the road. And so that gives incentive for the feedlot to go ahead and move those animals out. Now, what could flip them on that is if feeder cattle prices got extremely, extremely high, and it becomes more lucrative to continue feeding the animals you have. But right now, I don't foresee that happening. You can see where we've started to increase on weights a little bit the past few weeks. Well, that's a normal seasonal increase, and that's largely due to weather. A lot of these animals that going all the way from January through April and into May face some harsh weather in a lot of feeding country, and part of that, you see one huge decline there back in April, and part of it, that was because of that big major storm we had that went through a lot of feeding country. They had a blizzard where I don't know how many inches of snow fell, but that definitely hurt weights. Those animals weren't gaining 3 to 4 pounds a day during that time period, so that hurt weights on that time. But we'll watch those climb, but they're not going to come anywhere near a year ago. We're going to stay in that 20 to 30 pounds below a year ago for several more weeks. Beef cow slaughter is up 9%. Not a whole lot to say there. That still puts us in a herd expansion mode. Not as fast, not as big of expansion as what we've had the past couple of years, but we're still definitely in herd expansion mode from a national perspective. Beef production is up 4.2%. This kind of goes back to some of the things that Aaron was talking about on corn and soybean supplies and beginning and ending year balance type thing. This is a similar type look at the beef market. We have increased slaughter, we've reduced weights. So if we had weights the same as a year ago, we would be looking at a beef production that was 8, 9, 10% higher than last year. But with the reduced weights and opposite that, the increased slaughter, they've helped to keep beef production pretty similar to last year, which helps the beef market and helps prices quite significantly. Pork production's up 3%. We always talk about competing meats, understanding that pork and poultry are really not very good substitutes for beef. They're actually very poor substitutes. But people, what are the 3 major meat products out there in the grocery store? And if beef gets too high, well, this is what we're going to turn to is some pork and poultry. But we all know, anybody that's a beef eater knows that the most flavorful meat that we have is beef, and consumers prefer that. So that's why we have a price premium to everybody else, is because it's a preferred product. Broiler production is very much even with a year ago. And I guess I should back up. I visited with several economists in the past week. Actually, I visited with several of them yesterday. But talking with in major pork producing areas of the country, they're still ramping up pork production. Prices have started to decline in the pork industry. So hog prices are on the decline, but money's still being made, and so they're still expanding production to a certain degree. Lighter weights in the hog business too, though. So even though they might be harvesting several animals, we're still over 2.2 million head a week. That's several off the 2.4 million record that we set several weeks in a row earlier in the year or last fall. But weights have declined, so that's moderated pork production to a certain degree. The good thing for our domestic industry, even though meat production has increased, which is negative towards all meat prices when meat production increases, we've had very, very strong exports. For poultry, pork, and for beef. The pork industry lives off its exports. If it wasn't for exports, we wouldn't have a pork industry anywhere near what we have. But beef exports have been extremely, extremely strong for about 6 months now, 7 months or so, and we expect those to continue. And that actually goes back into. It was interesting that Aaron mentioned something about JBS. Well, JBS is going through quite a few struggles right now that are of their own Well, I guess when you get into bribery and unethical practices, people in other countries tend to look down on that and stop importing from you, stop buying your product. And so the Batista family, who owns that, there's two brothers and a father. Well, the two brothers have actually stepped down. One of them has stepped down from CEO, the position of CEO, and J&F Holdings, who is the parent company of JBS, is actually paying a pretty hefty fine, something like $3.7 billion. I don't remember what it was, but that's U.S. dollars. And like, as you saw, Aaron, that's pretty high on the reals. But we're talking several dollars. And they recently sold some of their assets in some of their other South American countries. They sold it to another major meat supplier. So we'll have to wait and see. Understand that JBS in the United States JBS USA is set apart from JBS South America. They both fall under the same parent company, but they keep their own books. But there could be some, I would say there could be some changes in how operations are run. But there's no reason for producers in the United States to be concerned about marketing animals to JBS or anything like that. Our system is very, very different, and JBS USA has to fall under our under USDA regulations. Imports are down, which has also helped our price. China is another opening up of the China market. We haven't started shipping any beef yet, but it's getting closer and closer. And we just had some news earlier this week that we got out exactly what those regulations are going to be. It goes back to being able, no growth promotants of any sort, whether that be implants or feed additives. That can't be part of the beef that's shipped, and have to be able to track the animal, have to know its home location and where it was harvested. It's not through the entire system. It's just a home location and where it was harvested. Meat packers have been making really good money. I expect beef prices on the wholesale level to start softening. That's a normal thing through the summer. As the heat of summer comes through, those middle meats lose a little ground as people start grilling more hamburgers and hot dogs as opposed to steaks when it gets really, really hot. Aaron's already showed you the drought monitor. I talked to Tim Petrie in North Dakota yesterday. I visited with him. And this time of year, the auction barns up there usually go to only having a sale every other week because they just don't have any animals coming to market. They're utilizing the good grass that they have this time of year, and they, because that mainly spring calvers, which they have to be. They can't be fall and winter calvers. It's just too bad of weather up there. But he said that the two biggest markets in the state are actually operating the market twice a week right now, when generally they would only be operating the market once every 2 weeks. They have so many cattle coming because of how dry it is. And it's not necessarily a major crop producing area, but they do have several acres of corn and soybeans, and that may play into some of that situation that Aaron discussed earlier. We know that range and pasture conditions are really good right now in our state. Anytime in June or July, if you ask me, it's a little dry. I think we're in very good condition right now, but we know that in a week and a half or 2 weeks time in the southeast, no rain ends up in drought. So I ran through some scattered showers yesterday in the Crossville area. Really good showers. But it doesn't appear it rained anywhere else that I crossed paths with. So I've covered half the state the past 2 days, and pretty much one county had a good rain that I crossed. So we'll keep eye on that right there. Rains have delayed hay harvest in many areas. what this is going to end up being is lower quality hay. So we need to go ahead and be thinking about supplementing cattle this winter if we have low quality hay. If you don't test your hay, man, this is the year to do it. I was talking to a producer in Clarksville yesterday, and he harvested his hay at the same time as he does every year, and it was in the middle of May. And the relative feed value went from 130 last year down to right at 100 or so this year. So it takes it from being good quality hay to fair quality hay. And he said the only thing that he could see different in his hay was that he didn't have as much red clover. So could the drought last fall been part of the factor that got some of his red clover? Sure. Could have been how it was managed. I don't know, but that's something that's very key. And I think he knows that he's going to have to make some plans on how he feeds his hay this next winter. Feeding cattle is still very cheap, folks. It is very, very cheap. Grain's cheap. Soybean meal's cheap. There's nothing to indicate that cattle feeding costs should go up. So feedlots have a pretty good idea of what their costs are going to be over the next several months. That's why they're paying very, very strong for feeder cattle right now. I think the Lower Middle Tennessee board sale last Friday, I guess it was last Friday, we had some 9 weights that went for right at $1.50. I tell you, when you have 9 weights going for $1.50, that's pretty hard to beat. Again, those guys are making probably $400 and $500 a head on those. Here is November futures market. We've had a great run up since the winter. Winter being January, February. We've had a really strong price increase. Right now, I see nothing that says we should have any type of huge decline. I don't expect us to really jump above that 150, 155 too much. You can see resistance there, but you can see there's a nice trade range between 140, 142, 143, all the way up to 155. And I don't see any reason for us not to stay within that range. But, when you look at it, that's a $10 to $13 range. Well, on an 8 weight, $10 to $13 is a lot of dollars a head. So, there might be an opportunity or appropriate time to use some risk management in that. This fast forwards all the way to March. So that was November, and this is March. You can tell that there's not as many trades going on, but we're all the way down to 140 in March. So the futures market is predicting a price decline between now and March. I don't know. We'll see. So I thought we'd run through 2 very quick. I see that it's 8:03, and I don't want to keep people any longer, but I want to run through 2 quick little value of gain expectations that I have. Looking at purchasing 5-weight, 525 pound steers in July. The past several weeks, a 525 is averaging anywhere from 160 to 165. So I used an expected price of 164 on the purchase, even though I do expect those prices to start softening some the next few weeks. Carrying them at 2 pounds a day, which is not pushing them very hard, but let's just give it the fact that maybe it's going to be hot and we can't push a lot of feed through them. And then with a November expected price of 145 on an 825 pound steer. And I just told you, last week we sold 9 weights at $1.50. So this is taking away weight and price. And I still have an expected value of gain over $1. $1.12 is a very, very promising value of gain. So from a standpoint of if you've got calves that you need to continue to put weight on and you're a cow-calf producer, continue to do it. If you're a stocker producer, I think there's still several profits that can be locked in. If you're still concerned about, you say, well, that Griffith kid, he doesn't know what he's talking about as far as prices in November because they're going to fall like crazy. Well, that's what I'm saying. Right now is the time, if you're buying some animals, right now is the time to go ahead and put a price floor in on those animals. I don't care if you're using LRP insurance, if you're using futures, or if you can forward price them to a feedlot. doesn't matter to me how you do it. If you can get something at that 145, even if you got a 140, you're still looking at a value of gain at $1 or so, which means you'll be making money because it's you can buy feed pretty cheap right now. And then for folks that'll be buying in this fall, I thought that's pretty key because there's a lot of people that have calves that are fall-born calves that came off weaned in maybe May or June. And so that's what the July issue kind of, where you are, or if you're buying stockers. But there will be a lot of animals that from the spring-born calves, as well as stocker producers looking to buy animals in the October, November time period. And if we carry them for 150 days, I've got an expected price here of 150. And I told you this is coming straight out of the stock barn. Last week we were at 164. So that's a 6% decline is essentially what that is. I've got 6% decline in price between now and October. Could we see a larger decline than that? Sure. But from the standpoint of you trying to make a decision, I'd rather have an expectation of a higher cost on the purchase. And that's even if you own those animals in October. It's like if you have to assume if you could sell them for $1.50, that's what you'd be buying them for. And then I've got a March expected price around 135, which falls in line with what the futures are saying. Again, at 2 pounds a day, saying we have a tough winter or something, we're still looking at a value gain nearly $1.10, just shy of $1.10. It'd be very easy right now, I think, to make a few dollars in this business over the next 6 to 8, 10 months. There's always risk in everything we do, but that value of gain looks very, very positive in both situations, and I think that's something that folks should consider.